excluding Bitcoin, do you think this would come down over time if Bitcoin wasn't there, or would that just keep serving as your quote unquote, your money or your perfect money, as you allude to in the thread?
Yeah, well, it depends on your frame of reference. I'm talking in real terms here. In real terms, house prices have done nothing but go down. If you look from the frame of political currency units, you see the opposite. You see house prices going up. My grandmother just sold her house for 10 times what she bought it for. It's like the house is the same. In fact, the house is probably in worse condition today than it was then. And why is it 10 times more expensive when technology's gotten 10 times better, say, or 3 times better? Well, it's because if you denominate said house in terms of political currency units and, fixed income debt instruments, there's an endless amount of those. And so you just have an exponentially increasing supply of those that you're denominating that house in. Well, of course, it's obvious that the price of the house in those terms is going to go up continuously. Now, if you price that house in terms of oil, barrels of oil, maybe the price would be very different. If you price that house in terms of bars of gold, then that's different. If you priced it in terms of wages and number of hours of labor it would take to buy the house, it's definitely going to be different. So it's all about your frame of reference. Looking forward, will the price of X increase? It's like, well, what's the money or the asset you're using to price that within? So it's all about frame of reference, and that's why people have such it's what it's all about.
Yeah, sorry, lag again. But yeah, so okay. So with regards to you're talking about real terms, what kind of terms your frame of reference. With Bitcoin, now Bitcoin fits nicely into all this because it kind of makes everything into real terms. Do you want to just explain that? So you're saying that Bitcoin, so you have stocks, bonds, etc. I'm just going to get a quote here from your article. But my stocks, my bonds, my cash, 000, much faster than you think. Do you want to explain why you believe that's the case?
Yeah, I got a lot of feedback on that, and some very interesting comments. If you want to, if someone watching this wants to read those, a lot of interesting discussion there. But yeah, what he's referring to is basically I have a few given charts up where I price things in terms of Bitcoin, and what you see is that on every chart, the line's going down. See, what most people do is they look at Bitcoin through the lens of their political currency unit of choice, and they see this thing that's going up and up and up extremely quickly. And they think, oh my goodness, that's a bubble. That's such high risk. I don't know why people are buying it. Oh, they're gambling everything away. And to their credit, it makes sense because in their mindset that they've had for their entire lives and their parents' lives and their grandparents' lives, and for thousands of years, going back and back and back, the way you price everything in the world is in your given political currency unit of your era. You view, that I don't have any cash in me, but you view a dollar bill as your measure of value, as your standard value. Going back again to the house, you price that house in terms of US dollars, and you think the value of that house is going up because you're pricing it in terms of those dollars. Well, what Bitcoin exposes is that it is the first immutable, fixed, closed monetary network in the history of humanity. And so what it exposes is the paradox in that assumption. Again, the house is not going up in price by a factor of 10, its real brute force physical cost is going down. It's that the conversion rate, the exchange rate into USD political currency units is going up because the United States dollar is a more open system. Its supply is more easily expanded than, say, the total inventory of the housing market. And so what Bitcoin exposes is it exposes the lack of, frankly, logic in that worldview. And it says, no, there's a fixed system here, a fixed number of monetary units in this energy network. And because it's fixed and everything else is not fixed, the only logical conclusion here, and this is what Hal Finney predicted back in 2009, and I go into that in my second thread, it's just why he was a genius, and how for the last 14 years he's only been proven correct, is that because this is a closed network and we're pricing all these open networks in terms of it, their exchange rates have to continue down forever. I've given the example on Preston and Joe's podcast about comparing oxygen versus the Mona Lisa, and I think it's worthy saying here too. It doesn't matter how valuable the oxygen is to your life and your survival. If you have a closed system where there's only one, like the Mona Lisa, the exchange rate has to go down to zero. In the oxygen has to go down to zero in relation to the Mona Lisa, because it's all about perspective. And so when it comes to Bitcoin, what do I mean? With the quote you gave of 000 trending towards zero forever. Well, what people fail to realize is that Bitcoin is not increasing. We look at it from our current worldview and we think it's increasing and skyrocketing. And it's like, yes, that's true from your view, but look from the other direction. From the other direction, you don't see Bitcoin as a bubble that's expanding. You see everything else as a bubble that's deflating. When it's, say the US dollar, just invert the chart. You clearly don't see Bitcoin going up in a volatile fashion. You see the dollar decreasing in a volatile fashion. And it's like, oh, that's just a bunch of semantics or whatever. But, it's really not. Both views are equally as valid. In terms of the USD, Bitcoin is increasing at a volatile rate. And in terms of BTC, the US dollar is decreasing at a volatile rate. And this has been happening for 14 years now. And so the only question is, okay, if both of these views are equally valid, which one fundamentally is more correct? And in order to do that, you have to look at the fundamental supply, the measuring stick within that system. And when you look at that fundamental view, Bitcoin is clearly the view that is more accurate, because it's an unchanging closed system. It is, yeah. So basically, what does it mean that everything else is trending to zero? Well, what it means is everything else is an open system, and it's only going to become more open. There is no limit to how many houses we can produce. There's no limit to how many stories we can put in those houses, more or less. There's no limit to how much land we can use or how efficiently we can use that land. There's more or less an infinite number of houses available. And likewise, obviously, there's an infinite amount of cash. As the famous quote says, there's an infinite amount of cash at the Federal Reserve. There's an infinite amount of debt the United States can borrow. Just yesterday, the Treasury came out and said that the debt held by the public is going to be like 700% of GDP by the late 21st century. And it's like, it's absurd. There's an endless amount of debt we can produce, and therefore there's an endless amount of bonds that we can dump onto the market, an endless number of political currency units. And, take stocks. Yeah, sure, they're regulated and they're a less open system than, say, cash. But the reality is there's an endless number of companies that could be made, and an endless amount of stock that those companies can issue. And there's an endless amount of brands, an endless amount, there's an infinite amount of all these commodities and securities and paper assets and fixed income assets. There's an endless amount of promises. There's an endless amount of all this stuff that we have, except Bitcoin. That's the only thing that we can't make more of, even if we tried, So anyway, that's what that means, basically. That if you have something where there's a finite amount and everything else has an infinite amount, the reality is that everything with an infinite supply inherently has to have its exchange rate decline in relative value against the one thing with a finite supply. Everything is oxygen and nitrogen and helium and gold and silver and aluminum compared to the Mona Lisa. And in terms of Mona Lisa, everything else continues to go down forever. And I encourage you to look at my thread, and I have a lot more threads coming up where I really dive into this, and it's just devastating for every asset that's not Bitcoin. The future is extremely bleak. Stocks, bonds, real estate, cash, art, silver, gold, I don't care. Whatever it is, it's only going down against Bitcoin theoretically forever. And it's already been going down for 14 years. And it's only going to get faster. So, yep.
So, okay, yeah, good answer. So just on that, it's like, is that binary? So like, what I totally get the point that Bitcoin as a whole, like if the Bitcoin thesis is correct, there's going to be no better investment anywhere than Bitcoin for at least the next, 5 to 10 years. Say 10 or 15 years out from now, and Bitcoin now is the currency of the world, it's the money of the world, and it's not really it's the currency of the world, and there isn't that there's that steady appreciation of value as more economic value is captured into it over time, but it's nothing dramatic. Is it still, like, in your opinion, is it still binary that as a rule, all, like, as I say, as a binary rule for each individual stock trending to zero against Bitcoin over time? Or would it be more like the market cap of the whole stock market will trend towards zero, but you could have individual, like for example, if hypothetically Amazon was still around and they were producing a lot of value to people, that they could actually outperform the deflation over an extended period of time. Do you understand what I'm saying?
Yeah. You're basically asking, is what I'm saying true forever, or is that just true for the next 10, 15 years, right?
Yeah, exactly.
I mean, I know this might be controversial and really hard to accept, especially for the people listening that have not given this Bitcoin thing, 100 or 1,000 hours of thought. But what I would say is this: I used to think that, I used to think that stocks would go up forever. I used to, just be like you. And my warning is that I used to be like you, and now I'm saying these things, and I, it's been a lot of thought into this. And what I would say to answer your question is that, yeah, I genuinely think that as long as Bitcoin continues to survive, stocks, bonds, cash, everything continues towards zero exponentially forever. And the farther you go out, the more dramatic it becomes. I think the idea that stocks and bonds or whatever will go down against Bitcoin for the next 15 years, and you're like, no, like I mean forever. Most people, when they make a prediction like, oh, you should buy gold or silver, it's going to do really well, you should buy real estate, they're thinking in a time horizon of 10, 15, 20 years. I'm talking about the next 1,000 years. Bitcoin may not survive 1,000 years, but that's irrelevant. I'm talking about as far into the future that we can possibly imagine. I see no other scenario in which any other asset appreciates against Bitcoin continually for an extended period of time. I don't think it's possible. Why? Well, you alluded, first of all, to the idea of Amazon's around in the future. Sorry to burst the average person's bubble, but Amazon probably won't survive another century. Every conglomerate or corporation or tech giant of the last, 5,000 years eventually became outdated. And again, why is that? It all comes back to technology. Eventually, Amazon will get so big and so bloated and so profitable that they don't innovate, they don't, reinvest properly, or mismanagement or whatever it is. And eventually some competitor with a great enough incentive will begin to take away market share from Amazon. And, so eventually every company in the stock market today, it's going to roll over into some new tech conglomerate, tech monopoly. So that's the first thing that should be said. But why fundamentally do I think that the stock market as a whole will go down? Well, the reason for that is because in the future world, if we assume that the world continues, the problem is that margins get squeezed tighter and tighter as the globe becomes has a higher and faster rate of communication, as the market becomes only more efficient. Just, technically speaking, margins have to continue to decline. And so, in the future, why on earth would you hold a piece of paper share promise equity within a given jurisdiction of a local government? And we know governments don't keep their promises. We know CEOs don't keep their promises. Why would you hold a paper intangible security of a corporation where you have to rely on their cash flows and their CEO not being caught up in some sort of money laundering thing? And basically you are buying a promise, a piece of paper of equity in a company that has counterparty risk. And sure, you might make money. That company might outperform, the deflationary money stock of the world, which I'm arguing is Bitcoin. It might do well for a while, sure. Definitely the last year is an example of how many stocks have not crashed 60, 70% like Bitcoin has. However, it should be noted, a lot of stocks have done worse, actually. Take Netflix or Facebook, for example. It's already happening. Stocks are down farther to Bitcoin in the last year. And they went up less than Bitcoin did in 2020 and 2021. And you have counterparty risk with those, and you don't have with Bitcoin. And this is the terrifying thing for me. I think in the next 5 or 10 years, people will realize, even if they don't fully agree with what I'm saying, they'll realize that it's a possibility. And once you realize that's a possibility, you have to protect yourself. And the only way to protect yourself is to buy Bitcoin. But why do I think it'll go down forever? Well, it's because no matter how well the company does, a company can bring value to the world. It can do wonderful things. But as the world gets better and more demand goes into that global monetary stock, and the risk of that monetary stock continues to decrease forever, and the inherent risk in owning a stock stays flat, and I would argue goes up as technology comes faster, there is a greater and greater financial incentive to just own that money, and less financial incentive to speculate and gamble in the stock market. Just to go back to what I was saying earlier, it's like I mean, it's like, step out of your 2023 shoes and skip forward a century and then look backwards to today. It's like, what does the average person do? The average person gambles, speculates in the global stock securities market and the global fixed income sovereign debt market. It's like, okay, half the companies on the market don't keep up with the market and they go bankrupt all the time. It's like there's so much risk in the stock market. And the bond market, maybe year to year has less risk, but I mean, on a longer time frame, it has a higher risk because countries are basically large corporations that are insolvent. The United States is basically a large corporation that's insolvent, and the only reason it hasn't gone bankrupt like a company is because they have a monopoly on their customers, on their taxpayers. And so it's like, again, go to the future and look backwards in time. It's like, what does the average person do today to save purchasing power for their retirement? They gamble in these equity security markets, and they gamble in these sovereign debt markets of countries they know to be insolvent. Everyone jokes that they're insolvent. And it's like, we put all of our purchasing power, all of our labor, and our capital gains into these things and diversify them in all these open systems and hope that the aggregate slow demise of these systems is slower than the aggregate slow demise of the political currency unit that we measure that diversified portfolio in. It's complete madness. It's completely insane, and like I was explaining to someone recently, it's like being a horse breeder trying to breed the perfect horse. It's like, that's what you do when you have a diversified portfolio. If we have this percentage of bonds and this percentage of stocks and this percentage of commodities and cash and whatever, it's so much work. You have to pay somebody 2% every year to manage the darn thing, and then you have to time when you get in and time when you get out, and it's like it's it's so much work, it's so much effort, and it's so complicated, and all you're trying to do is make the perfect money. If we follow this equation of diversification, then we can get a perfect conglomerate that basically acts as money that continues to hold and hopefully increase its purchasing power as a function of time. And what is Bitcoin? Well, Bitcoin is that. It is what that diversified portfolio is trying to do, but except better, infinitely better, because it's a closed system and because it absorbs productivity gains and because it doesn't have the openness of that system where there's an increasing supply. Bitcoin does exactly what a diversified portfolio is going to be. And so the funny thing is, today people ask me all the time, how should I put Bitcoin in my diversified portfolio and blah, blah, blah. And it's like, it's good. They're curious, but it's so frustrating because it's like, you fail to realize Bitcoin is not a given percentage of an allocation in your portfolio so that you can, make your best compound, blah, 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 blah. It's like, no. Bitcoin is what makes that entire idea irrelevant. It's like saying, how do I, oh, this locomotive thing's cool. How do I put a steam engine in my horse? It's like, people ask that question and they're genuinely curious, but they don't realize how nonsensical it is. It's like, no, this isn't something you incorporate into your worldview. This is a completely different worldview, and they inherently only one can survive. Maybe we're wrong about Bitcoin. Maybe it dies and the world continues as it has for thousands of years. But if you assume there's any probability that Bitcoin survives, you are inherently assuming a probability that your entire understanding of diversification and portfolio between all these open systems inherently has to go away. Again, to use the metaphor of the locomotive, it's like, to think the locomotive has any chance of success and survival and economic need in the future, you have to assume that the horse population per capita is going to collapse and that it's just not sustainable. And in the same way, I'm afraid people are starting to realize that. All their models are breaking. Nothing makes any sense. There's more and more speculation. There's more and more financialization of every part of the economy, and people feel that things don't make sense and they can't put their finger on it. And as I started out saying, everything comes down to technology. We have a new technology that makes this, all of our models and all of our understanding, all of our thousands of years of breeding horses, it's like, it makes it completely irrelevant. And people don't realize that yet. And anyway, I'm kind of going on here, but that's the basic distinction I would make, that, learn about Bitcoin. I'd encourage you to think of it first and foremost, not as a financial product you put in your current portfolio, but as a piece of technology. And once you realize this piece of technology does what it's designed to do successfully, then it becomes self-evident what to do. So
I'm glad you're taking Bitcoin seriously. You all should be taking your self-custody seriously. Where are you storing your seed phrase? Is it on a piece of paper? Is it on a sticky note? Or are you doing the right thing and putting it on a metal plate? My friends over at SteedStamp are sponsoring part of this video, and on their behalf, I'm here to tell you that they have a really good product for stamping your seed phrase on a durable piece of metal that you can keep over the long term. This prevents against your seed phrase getting lost due to water damage, fire damage, and frankly, it makes it a little more weighty and makes it a little more difficult to lose track of, and it's better psychologically for peace of mind with having it on something that you know is not just going to last as long as a piece of paper, but it's going to last indefinitely. So if your Bitcoin time horizon is for the long term and your time horizon for your seed phrase is for the long term, I highly encourage you check out Stampseed with their high quality experience in having Bitcoin seed plates for you. So go to the website. You can use my discount code in the description where you can get a discount off of your order of Stampseed seed plates. So it's a great company. You can get a great discount. Check out the link in the description and you can get your seed plate today. Thanks.